Hello, everyone, and happy Monday. I hope you had a great weekend. So this week I wanted to touch base. It's been a busy month once again. And what I'm going to say is the word for this past month and what's going to be coming up over the next several months is confusion. So there's a lot of government policies that have been announced without very many details. So we can roughly estimate what insurance premiums and all kinds of things would be, but we don't have any of that information because mortgage brokers got the announcement at the same time that Canadians did. So we don't have that much information or any more details than, let's say, the average Canadian would have access to. However, so there seems to be a lot of confusion about what insured mortgages look like versus uninsured and what the rates look like, and fixed versus variable, and bonds versus the Bank of Canada. There's just all kinds of stuff happening out there. And at the end of the day, the bottom line comes down to it's all customized. Your financial situation is going to be different than your next door neighbor, even if you have the exact same home. So at the end of the day, what I am telling clients and what I am telling the average Canadian is get your documents in order, because this is where people actually fail the largest, and this is where things take the longest, is people collecting their paperwork. Have your tax documents ready, have your final property tax bill ready, have your annual mortgage statement ready. That would have been mailed to you in January or February, as opposed to going online, because online, actually I'll need a copy of your online current mortgage because that'll have your current balance. But your annual mortgage statement has information that is really important. What else? There's so many. So once you have those documents in order, then I can actually sit down and help you figure out what it is that needs to be done. If you have a lot of credit card debt or lines of credits or, anything unsecured, now's probably a great time to start looking at what do those numbers look like and where do I qualify. So if your bank has turned you down, there are options that are out there and they're not that expensive. A lot of brokers out there are referring you, as mortgage brokers, they're referring you to banks and charging you fees. If you have a mortgage broker that's charging you fees while they're referring you to a bank mortgage specialist, let me tell you right now, that should be a red flag. So there's a lot of confusion out there. There's a lot of red flags out there, which is why there's a lot of rules that are changing under the Anti-Money Laundering Act. There's a lot of things that are happening in the industry, and that's why my word for the next little while is going to be confusion. So with somebody like me who has 27 years of experience in this business, I have been through these periods of confusion multiple times. And my job is to help you cut through all of that, not hear any of the nonsense that you need to hear. Because if you notice, people like to give free advice when you talk about wanting to do refinances, but nobody really knows your situation at the end of the day. So that's my 2 cents worth, and that's my advice. The Bank of Canada is going to be making an announcement on Wednesday. I am not going to be guessing or betting on what that discounted rate would be. There are all kinds of discussions around 1/4 point or 0.5%, and oh my goodness, you can make cases for either one. But prime today is 6.45%. That's another confusion that goes on. People think that the prime rate is 4.5. It's not. The overnight lending rate that banks borrow on is 4.5, but the prime rate that most borrowers have their variable mortgage against is actually 6.45%. So if it goes down 0.5%, that means that the variable rate will go down to 4.25%. And actually, no, that's not true. It'll go down to 5.95% from 6.45, sorry. And what I'm looking at is the 4.29% is the 5-year fixed. So a 5-year fixed insured mortgage is as low as 4.29%. and a 5-year conventional is 4.84%. So there's a little bit of a 0.5% spread between a conventional and insured. That's a point of confusion. The overnight lending rate versus the prime rate, that's another source of confusion. So 4.5 versus 6.45. And then what the variable rate discount would be 5.05. That's if you're getting prime minus 90. So you can see I can throw out a whole bunch of numbers and cause confusion, and I can do it in 5.5 minutes. So with all of that being said, my final message is let's clear out the confusion and let's get you organized. Let's get your documents ready and let's see what it is that you qualify for. There's a lot of people that have mortgages that are at higher interest rates. And so now's a great time to look at, should we break that mortgage and try to get a lower rate? Now's a great time to start looking at your numbers again. Have yourselves a great week, and I will follow up with more information next week. But Thursday and Friday, I anticipate you're going to have a lot of questions. If you do, after the Bank of Canada announcement, just feel free to give me a call. My cell phone number is always available. If you get my voicemail, just send me a text message and we'll set up a time to chat. Have yourselves a great week. Until next week, take care.